Hello traders from the inner circle and welcome to a new trade recap video from today's GBPUSD trade as I promised to you today. I know this setup was not very easy because price just reacted very quickly to our demand zone, and I noticed that I made today a very big failure by analyzing GU. And yeah, this is something which you will always cover up. And important is that whenever you found that out, that you took a stop loss hit, is that you should definitely reflect your trade. And this is how you are going to be next time, better and better and better. Now, here on GU, I'm going to give you right now a full breakdown analysis. I'm going to start with the higher time frame as always. And yeah, for everybody who watched the Zoom call or have been with us in the Zoom call, yeah, they've already been aware of the situation on GU. Now here, very quickly, I'm not going to go over here in too much details. We had just a bearish bias, very easy. You can see we've been tapping into this daily supply, from this daily supply into the next daily supply. This one here is not a supply for me. It's one on the 4 hours, but not one on the daily. And because we are already mitigating this, probably we will not go up higher, guys. That's one of the probabilities that we're using for our advantage here. Now, it doesn't mean that we cannot trade always every single direction. We just need to figure out what makes the most sense that the price will actually do. Now here I'm going to use right now very quick the backtesting tool so that we cannot spoiler here anything. So that was the situation, how it looks like, how it looked today. And as I said already, here we tapped into the supply zone, and we can see price has broken here structure. Okay. And if we're going to map out the range, then that was the range. Okay, that was the first range, and then we had the second range, which was here. Then what we did is we put it down here because it wicked below, but it didn't broke below. And here the same, so we put it all the way back up. That means we are on the 4 hours on the GBPUSD bearish. The outcome should be bearish. Now that doesn't mean that the price cannot go up higher. And this is the key of our strategy. We're trading basically everything. Of course, trading with the trend will provide you higher risk reward and better win rates. It's just one important thing to say here. Whenever it is super clear that everything is bearish, for instance, then you can always expect the other thing, So you can expect the price will just manipulate at that zone very often. Just remember EURUSD, where price just dropped down, everybody thought it's bearish, and then suddenly it went all the way back up for I don't know how many 100 pips. So I guess 100 pips, it was around 100 pips, took out the equal highs, and then it started to drop down lower again and to follow the overall bearish bias. And here that was kind of the same thing. So it was bearish, for everybody was clear what the price did, boom, just faking out here above to take out more liquidity. And yeah, that's part of this business, and we need to be aware of situations like that. Now, therefore, I'm never scared to also trade pullbacks because I know they can also make sometimes a lot of sense. And yes, I like to trade both directions. Now let's come here to the analysis. Let's have a look how these 4 hours are looking like. You can see here nice supply zone, which was already mitigated, and then here a new supply zone because it has broken this structure over there, and therefore it means we have here our new range, so we can expect price to come up higher to mitigate the supply zone and to follow all the way back down to follow the overall bearish bias. Then what we're looking for is here to understand what do we have here. Well, it's a ton of liquidity. So you can see here, very nice, how price is currently targeting that liquidity. And that was something which we've been aware when price was already here, targeting that liquidity. Now, what we should look like in a range like that, it's bearish. So the outcome is probably bearish. So we don't know, price could also from here reverse all the way back up, to see from here, strong movement all the way back up. That's possible. But what we know is here, at least a little bit of pullback will always make sense in a bearish range at the bottom. You know, it's the extreme. The extreme gives you always, like should I said, the last chance to go in the counter trend. Okay, now what we're looking for then is an unmitigated demand zone, and this is what we can found here, and that was a pretty nice one, minute 15 demand zone, and it's one which you can then refine to the lower time frame. So you can come here to the minute 5 to see if you can spot something. So what I recommend is to always refine it all the way back down till at least minute 5. Okay, the best is to also refine it to the minute 1, of course, if it makes sense. And why do I say this? Because in this case, minute 1 could be dangerous. You know, you need to understand, are you going to go for risk type of entry? So here in this case, could have been just putting your buy limit, rocking it all the way back up. Yes, why not? If you do it on a 1 minute, that's what I like the most, you know, to go for risk type of entries on the minute 1 as well. And what you can see here, exactly within that minute 5 demand, you can spot here this, which is here slightly mitigated, you know, so this could be your demand zone, or you use this one as well, so you can use both ones. In this case, I like both, would be nice. And what you can see here, it's just the minute 5, you know, just split it in two, so not a real big advantage. And as you can see, the first one is not working out, so you can just delete it right now, and the second one works out pretty good. Yeah, now what we're looking for here is very easy. We're waiting for a charge, you know, for our confirmation that we will really take that one direction. So it's in the minute 1 demand zone, which is giving us right now the confluence. Okay, price is ready to give us a charge, because price will give you multiple charges, change of characters, and it will be used to fake you out. Now therefore, I like to see price tapping into a refined minute 1 demand zone, and there I would like to see the charge. And here you can see the first low getting taken out, you know, very nice with that one wick, and we're using it like this. Then here is what we would like to see next, and if this will occur, boom, like it's doing here, we can see, yes, we got a nice demand zone right over there. We can place our buy limit, and we're ready to go. That's it. That's how you're going to trade this kind of thing. Now, my problem was today that I missed that, you know, so thank you to you who posted this, to Tony. Yes, Tony, it was you. You've been posting that in the inner circle, that you're already in this position. And then I thought about, okay, I would like to join you. You know, I would like to get my entry there. And what I noticed is that price just went up higher without giving us any mitigation. Now, as I said, I made today a big failure because I just didn't recognize something on the charts. And that was the thing, that this demand zone here, you know, I viewed it like that. And I said, okay, we've been already mitigating in that one zone. Now, what is important is you can see that the minute 1 is starting from here, which can be refined like this or even like that. What I always recommend is to let it like that and to wait for a charge. In this case, you can see this is a big zone. You have here a zone of almost 4.5 pips, so I'm not interested in a stop loss which is that big, you know. And the thing is, I thought about, okay, this is a minute 5 demand, and this minute 5 is already mitigated with this tap here. Now, if I'm checking it right now, it is an unmitigated minute 5 demand, so the whole thing here, and it was stupid because I just didn't recognize it for some reason, and I don't know why. But yeah, this happens, and now thankfully that I know where I was wrong today, because I just didn't figure it out at the beginning. I just was aware, yes, price could tap into it, but I just viewed this demand zone to be very saucy. Why? Because you can see clearly here a nice, you know, liquidity, almost triple lows, and you will see here now how price is moving, giving you just so much liquidity. And I just thought about, okay, price will come down lower. And I thought about, okay, this may be already mitigated. So if that would have been the minute 5 and that 1 minute 5 would have been already mitigated, then probably the price would have been not dropping all the way back down, and it would have been respecting this one, you know. Okay, so this one is then invalid at that point, and we can use this and to mark here a nice liquidity area, because that's it, you know, that is what it is. And we will expect your price to come into our zone. It's such a big zone, so I would like to see their price giving us here some nice price action confirmation. So here, let me just delete this and let me just come back. Important is, guys, and this is why I'm switching right now the charts, is to have a chart which is like that one, which is your broker, you know. I always like to use Oanda or Forex.com. FXCM is not my broker that I like. FXCM has just sometimes different spikes. In this case here, everything is good, but here the price action just looks then a little bit different. And this is why, yeah, I do not care about the FXCM because I'm not using it. And my broker that I have has similar prices to Forex.com or Oanda. So very similar. And also what you can see is that Oanda has very nice candles, you know. You can really see the price giving you the full body candles and so on. So this is how I like to use it more, and especially Forex.com is another level better. So definitely recommend you to use one of these two brokers and to not fix on the FXCM. But sometimes, just to keep that in mind, is sometimes it's good to view all brokers, these 3 brokers, and to see if their everything is the same. Because I just noticed sometimes it's really different, you know. So there is a 4-hour demand, and on FXM, for instance, there is no demand, and that's just crazy, you know. This can really manipulate your trading a lot. So let's come down here, and what we're waiting is, as I said, for a 1 minute charge. We are here already in the minute 1 demand zone, which is good. So we tapped into it. So at that moment, it's for me already interesting to view that. And here, guys, you need to open up your eyes and to understand where the charge is occurring. And what I recommend you is, in a situation like that, is to wait, to use the 5 seconds, you know, use the 5 seconds. So here you can see price has paused a little bit and it gave you already the first charge. And then you got the second one we'll get here. Boom. And this 1 minute candle was at the same time your entry, you know? So it was very fast. So this is why I definitely recommend you to check out the 50 seconds or the 5 seconds. What I do is, because you can see here nice, you know, now you can really see it pretty clear, right? How the charge occurred. I just use here, in this case, the whole movements, you know, because it's then the exact same like on the minute 1. Okay, it's fractal, very important. So here, what we can see is liquidity, you know. So price has provided you here on the 5 seconds some sort of liquidity, which we would like to see, you know. It's not necessary always, it's just very nice if you see it. And this is how you can time a little bit better your entry. Now, what my aim always is a 1 pip stop loss. So what I do is I just put here like this, the stop loss below it, or I just use it really like that, you know, to just gave me that one room a little bit, because I don't like to be getting faked out right now in the 5 seconds. 5 seconds, it's very easy that they will take you out, and you will just need to take a re-entry or so on. And yeah, then you go, you know, that's completely fine. I would not try right now to determine here any refined, you know, in the 5 seconds. That doesn't make sense. Use it like this, for instance. This is a good area. This is, you know, this is the real powerful movement down. This is where the demand zones really started. In this case, yes, you definitely see here, obviously, the liquidity. You can see here the mitigation, you know, this is the unmitigated part, but all in all, this is the range. Now, don't play here too much, guys. Don't try to interpret here too much things. Stay with 1 pip stop loss and you're good. Okay, and as you can see, price really came all the way back down in this case, to really tap into this unmitigated one. Now, you could have been taking like that, but I don't know if you will grab it like that, I don't know if your broker really has the same numbers like Wanda or Forex.com, or or if the spread will kill you or anything like that. Okay, probably have an account with 0 spreads, but exactly at that moment it will be a little bit higher, so you never know. So I would not play here with fire if I am you. This is why I'm not doing it. This is why I'm more than satisfied with 1 pip stop loss, and as you can see, price rocked it all the way back up. Crazy. So it really just gave us afterwards a little bit small move down, as you can see here, liquidity and new demand zone, and it started to mitigate all the things all the way back up. Yeah, so my close was then also pretty obvious. So just here at this start of the supply zone, I was already pretty happy because I got my 35 risk reward at that moment, so I just closed it. Initially I planned it with a little bit lower, but then the price just moved so crazy, so I just closed it then manually around that area, and it was 35R. Just place it then afterwards. I was happy. Price just went up even higher, it just took out here the liquidity. Pretty nice. Came here in the supply probably there, which was obviously already mitigated, but okay, cool. That's it, guys. Thanks for your attention. Hopefully you enjoyed this video, and we will see then next time or tomorrow with new analysis for the day. Bye bye, guys.